Fast stock market news, where I give you all the news as fast as I can. So yeah, guys, today in the stock market was a pretty good day, especially if you're a tech investor. Overall, the S&P up in the green. It's about 10 minutes till closing bell, but the S&P 500 is up about 2.8% in the green. The Dow's up, well, pretty much flat for the day, and the Nasdaq, the biggest winner of the day, being up 1.5%. Russell's up 1.25%, and the biggest loser is crude oil. So what's going on? Why is tech rallying? Why is crude tanking? It's a couple of things, but one big driver right now is, as you guys might know, that energy continues to slide for the whole week. We could check out the XLE ETF that has the biggest energy companies in the world, like Exxon, Chevron, and whatnot, and they're actually done 15% for the week. That is insane. You'll be hard pressed to see an ETF down 5% plus. That's not called ARC on a day, and for a week to be down this much is absolutely insane. So you might be wondering, why is energy down so much? And the big reason is, before I get to that, when we're in a recession, guys, when we're in a bear market, every single sector will get hit. It doesn't matter if you're tech, if you're like a gold or commodities, it doesn't matter. Even energy had to get hit sooner or later. For that reason, they're down 14.4% for the week. But the reason that they're down is basically energy companies are in the red, like Exxon, while the recession fears may be behind the drop, as some analysts predict a downturn could lower gas prices. So basically, if we enter a recession and the market has gone from pricing in inflation, basically trying to minimize inflation, to now basically assessing the risk of a recession. And right now, as it stands, the stock market thinks that we're going to go into a recession, so everything gets hit. The last real sector to get hit is energy, and right now they are tanking for the week. But to sum up the whole recession fears for the market right now, I'm gonna pull up this video so you guys can take a look at what's actually happening today.
Looking forward to this all week, my friend. Where, as the dust settles, what do you think about the landscape?
Well, Kelly, as you well know, we've already seen some areas of the economy start to break, whether it's housing, and we've seen that across every housing metric that exists right now, whether it's the crypto market, whether we're seeing strains in the European sovereign debt market, whether seeing Japan struggle with its own policies against a tightening Federal Reserve. Something at some point has to give, and the market's gone from pricing in rising inflation to the risk of recession. So these are these pain points at which, at least in the past, the Fed has, if not stopped raising interest rates, taken a pause, reassessed. And so I think this notion that it's everything is on the table with respect to raising rates, I think that's true up to a point, all other things being equal, and I just don't happen to think they're equal.
We had David Kelly on Fed Day, Ron, and he said the classic mistake of Feds through time immemorial is the idea that they wait too long, then do too much for too long. Is that a possibility here?
Well, with all due respect to individuals who make statements like that, they were among the people who were suggesting the Fed needed to do much more in order to rein in inflation, even though the visibility around supply disruptions, around the war in Ukraine, the lockdown in China, were obviously complicating the picture dramatically. And so we've heard a host of academics, Wall Street economists, and others say the Fed should have gone earlier. They should have done more. They should have raised rates 100 basis points.
Yeah, but that's so easy. I mean, a year ago, most people, I've got to say, most of the people who are coming on here were using the word of the year, and that is transitory. They were not calling on the Fed to move right then. Maybe by the end of the year somewhere.
And, if you look at Larry Summers and some of his acolytes, they've been suggesting that the Fed was behind the curve. And in 2020 hindsight, not knowing, again, at the time what we know now, it's very easy to say that the Fed waited too long and then should do too much. Now that the Fed's done too much, they criticize him for going too far. I think there's, the amount of Orwellian doublespeak in the economic community right now, I think, is staggering. And I think that we're at a point where something like 94, 95, like 97, 98, where something could go wrong that would force the Fed's hand and cause them to stop doing what they're doing at the moment.
Yeah, have it, guys. That's pretty much what's happening right now. The market has gone from fears of inflation getting out of control to now basically fears of recession. Right now, it's basically trying to navigate through the recession fears that are happening in the market, and if the Fed can even conduct a softish landing at this point. And that's pretty much what's happening for the day, guys. Thanks again for watching, and I'll see you guys again tomorrow. Take care, everyone. Bye-bye. Thanks again, everyone, for watching Fast Stock Market News. If If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.